Guys, welcome to Sniper Sundays. I hope you're all well, and yeah, I hope you've had a great weekend. Now, what a week we're going to have in front of us is going to be very, very, very busy. So, the only place to start this week is with the fundamentals. So, I'm going to go through some stuff. Some of you more than likely have heard, some of you may not. So, I need to just cover this for everybody. Now, over the weekend. This week coming, we've got a very, very busy week fundamentally anyway. So I was looking at that last week, always looking ahead. Even on a Thursday and Friday, I'm still looking ahead at what news is coming next week on a Monday, Tuesday, Wednesday, and so on. Because as I mentioned before, market likes to price in news events, so I'm always looking a week or two ahead even. But saying that with a big week fundamentally anyway, then we've had big fundamental news over the weekend. So basically, what's happened is in Saudi Arabia, there was an attack on an oil rig or oil field by well, they're not sure who yet, but there was an attack on Saturday, and they're saying that it's going to basically reduce the output of about 5 million barrels a day. It says this here somewhere. The Wall Street Journal reported that 5.7 million barrels a day of output, 5% of the world's supply, will be taken offline as a result. Now, I've explained before, oil and gold and stuff like that are majorly influenced by fundamentals. One of oil's main sort of things that determine price is supply and demand. Now, when we have the crude oil inventories, that tells us the output and that's going to be of oil there's going to be. So that affects the supply and demand. So the way supply and demand works is the less supply, the more demand, and the more supply, the less demand, because there's more of it on the market. So you can imagine if you're flooding the market with loads and loads of oil, the demand is less and it's going to be cheaper. But if in this instance there's a sudden shortage of oil, or 5% or 5 million barrels a day shorter, or 5% of the world's supply, then obviously there's going to be a sudden demand. So what we're looking at here is just looking at this, looking over various sort of news articles. Let's just quickly go into oil. Currently, it looks like I would say we're going to have a big gap to the upside for US oil on market open. On Friday, I'll just quickly jump back to where we were on Friday. I had this sort of trade mapped out. Remember, I was explaining I really like longs and longs next week on US oil. So you can see we had this big push down. Now, remember last week we had this sort of sudden push down all of a sudden. Trump sacked someone within his cabinet, or within his government, who deals with the Iran situation, which I'll come to in a minute. So all of a sudden, from where we looked like we are going to push up and hit about $60 a barrel, we came all the way down. Now, many people were asking me, should we close our long trade? Should we close our long trade? And I kept telling them no, because this is one of the reasons why. We're long from down here. This is our entry. So from these regions, from this region, we were up about 500 pips when we came up to the upside. Now we've taken some money out of the market as we hit 100 pips, 200 pips, 500 pips. So we've got about 25% still running. Now with that 25%, we just always keep our stop loss at break even, and this is why I don't move my stop loss to sort of on some occasions don't move it to the last lower high, because especially with oil, it's very volatile, so you can push up and push down. But we need to just keep our stop loss and ourselves away from trouble. So we've had that big push. Then all of a sudden last week, we pushed all the way back down. We had that little long trade on Thursday. Very quick, jumped in, got 100 pips, pushed back down, closed 50% at break even. And then on Friday, I was looking at taking a long trade. You can see here, we had that pullback. We had, I mentioned on Thursday evening that I'll be looking, if we came back down and made a double bottom, sort of dipped into this level, I'll be looking for longs. Then I was monitoring, and I was looking at, you can see a spike to the downside, especially I think on the 1 hour chart. You can see here we get spikes. We had this 3-pin pattern. Remember this sort of reversal sign? If I just zoom out on the 1 hour here, see this 3-pin pattern on the 1 hour, 1, 2, 3. showing us that price was rejecting this level. Now you may remember this 3-pin reversal pattern here is where we actually took that initial 500 pip trade. See, remember down here, 1, 2, 3, 1 hourly 3-pin reversal pattern from down here. That's where we took that long trade. So at that $54 a barrel level, we're up around the 55 on Friday. I was looking at holding this long, but as always, and I'm still happy to have not held this trade, is because fundamentally oil is very affected massively by fundamentals. Now I do think, and many reports are reporting, or news is reporting, that there could be a massive gap upon open. We could see price come up here. We could see price up at $60. I've even seen some articles think that there's going to be a knee-jerk reaction and we could see price up. There was one article that said $80 a barrel. We could see some craziness happening on market open. But also on top of that, we could also just see a knee-jerk reaction in the opposite way, and then we go up. The market can do a lot of crazy things and can be manipulated by brokers and so on when there's huge price influx. But I do think that we're going to see oil push up higher. We didn't hold that long on Friday. If we do see a push up higher, then it's unfortunate we didn't. But we always have to remember it's better to be safe than sorry, because had the news been in the other direction and we dropped down, say $10 a barrel, which is 1,000 pips, or we dropped down even 200 or 300 pips, then we could be in a huge loss. So that is why we always get out if we're not in a good amount of profit and our stop loss isn't at break even. So we have big oil news affecting the market. We could see a big gap up here on market open. We could see at $60 a barrel. I wrote an article about it last week on BDFX on the website. So we could be hitting that level. Now I'll just go back to it again. So we see here Saudi oil attack is the big one. So yeah, I explained there's 5.7 million barrels of output a day, which is 5% of the world's supply. So I'll put these links into the group so that you can read them. Then also on top of this is, so someone has attacked the Saudi Arabia oil field, and then Iran has been accused of doing so. So Iran has been accused of the culprits for the actual attack, for the drone attack, and Iran refuses and does not agree that it was them, and they are basically saying they're ready for war with the US over the Saudi Arabia oil attack accusations. So the US has basically said that it's Iran. They think that Iran has done it. Iran is saying that they haven't. So then we've got this key word here, war talk, once again. So what do we know about when there's war talks or tensions? If I just flick over to the oil chart, the gold chart, we could see a big gap up in oil and gold as well. Now gold, we had a 200 pip drop on Friday. We took 75% of this. We took 50% at at 1500, which was about 80 pips. And then on Friday evening, I told you to close another 25%, because again, this will teach everybody a lesson, because now we've had a big week fundamentally. With commodities, you really don't want to leave too much to yourself exposed over weekends, because majority of weekends nothing happens, but then there is those weekends where you can see big things happening. Now, gold is a safe haven investment. When there's things such as war, words like war thrown around in the world, everybody takes the money out of other currencies or other sort of investments and puts it into gold. Gold is considered the safest sort of commodity or investment that there is. Gold is always going to be worth money. Gold will always be around. There's always a want for gold. So then when people have their money in investing in the US dollar or the Japanese yen and stuff like that, at times of uncertainty in the world and when there's talks of war, people pull out their money and invest it into gold. So gold, we could also see a big gap open on gold. We could see this come back up. We could see our stop loss taken out at break even here. And we could also see, possibly even next week, a push back up to the upside with gold to come all the way back up. And do you remember when we were looking at sort of coming up to that 1565, 1575, 70 area, and then we pulled all the way back down? Remember, gold is still in a bullish market, which I keep explaining, keep showing. So we see high highs, high lows, higher highs, higher lows, but overall we're in a bullish market. So even though we took that short, what I'm watching out for this week, regardless of the news, was that we were coming to this third touch of the trend line. Now guys, if you watched the webinars, anyone that's been in the group understand the third touch is the all important touch on a trend line. That's where we get the sort of the power or the catalyst to be able to bounce off it and get that big boost. Now here they've come to it on a daily, and this could be what we're, along with the fundamentals, this could explode up to the upside. So we need to be very careful on market open. We need to see what happens. We do have 200 pips short. This may get stopped at break even. We might see some action around here, but this is going to be a hard one to call. All I can really is say to explain the fundamentals and give options. Then we need to see how the market opens this week, because this sort of news can affect everything. So we might see gold affected here. We could see money push back into sort of a safe haven here. And as I said, oil, you might see a big push up. Now, this was all come out on Saturday. Since then, I believe like the effect on the oil field isn't as bad as they first thought. I think the fires have been put out and stuff. So again, it might not be as bad as some reports that on Saturday believed that oil could come up to $80 a barrel and all of this sort of talk. Remember, media is media, and it's very manipulated, and you're only told what they want to tell you. But as I can say with oil, is everything, we can see everything in price before it happens. If oil does go up, we saw a really nice push up 2 weeks ago where we had a 500 pip trade. All of a sudden we pulled out, came back down 400 pips, still holding our entry from here. And then it just coincidentally over the weekend, then we get that news that comes out that may help this push all the way back up. Now I said oil actually pushed down on last week due to Trump. So here we've got another article. Trump has a few options to respond to the Saudi Arabia oil attack. Now Trump really has been firing people left, right and center, and I think it shows here. Yes, here it is. An added challenge. The Trump administration foreign policy had narrowed with the departure of the National Security Advisor, John Bolton. So when he fired this person last week, that's what made oil, that's what we believe made oil fall. Mr. Bolton was the chief architect of the Iran strategy. So basically he was the liaison with Iran, and he was the advisor of the national security and so on, and he got fired on Friday. So he's the person who would help Trump deal with this sort of situation if something like this happened. And it just goes to just coincidentally that Trump fires him on the week when he needs him the most to help out. So basically Trump is sort of on his own, and needs to sort of sort out these situations. So there's loads of stuff happening, but you don't really know what way the market's going to take this, purely because Saudi Arabia, yes, we know that an attack on an oil field. If some of you guys remember a couple of months ago when we took a long oil trade, when there was an attack on oil cruiser ship, and then it went up for about 700 pips. So obviously we know that something like this is going to make oil go up, but then there's also this talk of war, which is thrown in the mix, which can send things into mayhem as well. So much stuff coming out. I'll add all of these links in so you can have a little read this evening and understand what is what. But fundamentally, gold, we may see a push up from here now and come back up. Let's see if the market gives us a chance to take an entry. But we have to see. We have to see what the knee-jerk sort of reaction. We might see a bigger push down initially. If we do, then close out some more of the profit and move stop loss. Make sure your stop loss is at break even. But yeah, it's gonna be very interesting on market open in a couple of hours. The dollar index will be affected as well. The US dollar. We'll have to see what way the dollar is going to go. Remember, oil and the US dollar. Oil is always sold in US dollars, so they are linked to each other, but also the talk of war can may weaken the dollar as money goes into gold. So we have to see what happens here. We've got this really nice sort of head and shoulders formation across here that we saw last week. We had a really strong bearish close on Friday. We just look at the weekly chart on gold. On US dollar. You can see very bearish as well. But we have to see. We have to see what happens here. We've got really nice bearish action, but we have to see what happens with the news when it opens up on Sunday evening. We break this area here, we're going to come down, could be coming down to 96.50, 94.50. We could have a massive gap here and move down to the downside, but we need to see how the market reacts to the news, to the talk of war, to the oil news, and so on. So very interesting. Gold, US dollar, oil on market open and all of next week. Now on top of that, like that wasn't enough, let's go through the normal fundamentals. So on Monday, we've got a bank holiday in Japan. Now Japan can be, the Japanese yen could also be highly affected by this. So we'll have to see how the reaction to that as well on market open. There's going to be big movements, I think, when the market opens. But bank holiday in Japan on Monday. We also got Boris Johnson is meeting people in the Eurozone regarding Brexit on Monday. Then he going to court on Tuesday regarding closing down Parliament in the UK. This sort of stuff isn't on Forex Factory or other scheduled economic calendars, because it's not scheduled. It's that things change from day to day. So keep your eye on normal fundamentals. Keep your eye on Bloomberg TV. Keep your eye on things that keep you up to date, and not just reading off a calendar like this, because you'll miss certain things. Especially with this talks, everybody should have Twitter. Everybody should be following me on Twitter, but you should be following President Trump as well, because when he tweets, something's a lot of the time things can happen. So you want to be keeping up to date at all times. Tuesday, we've got Australian news. Keeping an eye out for this one on Tuesday. Wednesday, we've got CPI news for the pound. Got US crude oil inventories on Wednesday. FOMC meeting on Wednesday evening. Lots coming out, and the New Zealand dollar news on Wednesday evening as well. Thursday, busy day. Australian dollar, unemployment rate, employment change, Japanese yen monetary policy statement from the Bank of Japan press conference, Swiss news, pound retail sales, big one, pound official bank rate, lots and lots coming out, guys. Lots and lots coming out this week. It's going to be very volatile, which is great for us. It's a great week. Volatility means movement, means more sort of setups and more options for us to get into trades. Then we've got some Canadian core retail sales, quite a big one for the Canadian dollar on Friday. So we haven't even got to the charts yet, really, but you can see how busy it's going to be this week. So let's just have a quick look at these charts. So Euro US dollar, big push up last week, big news, Euro news, sort of manipulated everybody. Price was sort of priced in already. The week Euro was pushed all the way down, and then we had the Euro news, and we've created this double bottom on the daily chart, and now we're looking bullish to move back up, even though we had a pullback on Friday. So we've got this sort of morning star formation here, 1 2 3, 1 2 3. Sort of not the strongest weekly candlestick, but it is a morning star, and it's sort of 3-pin rejection on a weekly higher time frame. The higher the time frame, the stronger the candlestick formation and the candlesticks. Daily, we can see here, quite strong. So now on Thursday, you can remember I was explaining that I wanted to pull back first in order to look for longs for Euro US dollar. We had this really big push up after the news, but I would not want to take a long trade here, because the risk reward is not good. We've got a big risk. But the reward I do think is going to be quite large, but I want to see a little bit of a pullback first. So I want to see what happens on market open. We do have this sort of daily trend line coming across here that we just tapped. You can see we just had that rejection on Friday. So from here now, we're going to find some rejection. I'm going to see now if we can have a little bit more of a deeper pullback, and if we can still hold at this level, then from here we can be looking at taking long trades. However, there is a lot of news out. We have to see how the US dollar is affected this week. Remember, all pairs are, the US dollar is going to be majorly affected over the weekend. So is gold, which affects loads of pairs, and so is oil, which also affects pairs. So all of the main sort of things that can move the market are all going to be moving at the start of the week. So all of these, we can just have a look at what options we have, and then we'll have to pick up on Monday once the market opens and see where we're going to go. From here, I would like to see a pullback down into this level, reject this level or this area once more, maybe hit this sort of inverse head and shoulders level here. As you can see, this sort of left shoulder, this be the head, make a right shoulder. But if we do break out first, then I still will be waiting for a pullback and waiting for that good entry. Euro GBP, so I think it's the first trade we lost in about 2 weeks. We lost this trade, guys. Take it on the chin, it happens. So we lost from the bottom of this. If you took an entry from the bottom, we lost 60, 70, 80, 90, 30 pips. From the top, 50 pips. Now, okay, let's just say we lost 50 pips, worst case. It doesn't really matter. On, where are we? On Friday, we made 200 pips in 5 hours on gold. Big drop from here. When everyone else is going long, we took a short trade and we dropped out of the sky for 200 pips. So we had 200 pips there and we had a loss of 50 pips here, worst case. So that's, you know, guys, still 150 pips up just on Friday alone. So we have to lose. Sometimes we have to give a little bit of money back to the market, just part of the business, really. You have to see trading as a business, and it's the cost of doing business. It's the cost of that. Any business in the world has outgoings. So if you can imagine, if you have a shop, you have to pay rent for your shop. If you sell clothes, you have to buy the clothes and then sell them at a higher price. It's just part of business. You have to take losses in the Forex market. And if you think that you're not going to take losses or ever lose, then you're mistaken and you're never going to make it. You have to take losses on the chin, and you have to deal with losses and just brush it off and move on to the next one. You just have to really not care what happened with a loss. A loss is 1%. This is why we have risk management. A loss is 1%. You take it on the chin. We lost 1% on Euro GBP, but I think we made 3 or 4% on gold. If you sold from the top, or even if you sold from the bottom of the short zone, it was stop loss was at 15.12. I know we took some profit as we came down, but from here you can see it's a 3-to-1, so that's 3%. We took some profit already, so still about a 1.5 to 2% that we got there, and we had a small loss on Euro GBP. So, as I said, you just have to take losses on the chin. Anyone that thinks that you're not going to lose, what a lot of people do is they keep over leveraging their account. You win 2, 3, 4 trades in a row. You get overconfident. You keep placing trades, and then because you don't have risk management, you blow your account on one silly trade, on losing 40, 50 pips, which is absolutely nothing. You end up blowing your account because you haven't got any risk management. Now, risk management at all times allows you to lose a silly trade like this. Come out the market. We'll still look for maybe a re-entry this week, but we make sure that we concentrate on our winning trades, and then we get big trades like oil for 500 pips, gold for 200 pips. Okay, we might lose 40, 50 pips here and there, but it's nothing. You don't have to deal with it because there's only 1%, so you shouldn't need to deal with it emotionally. It shouldn't matter to you. So enough of a rant there. Euro GBP. So we can see here, I'll just notice this really nice trend line here, 0.1, 0.2, 0.3, 0.4. I am watching it around this level this week. We've got this sort of descending sort of flag situation here. So I'm watching out for this. I'm watching price here. It did look like we could push down here last week, but we were actually 20 pips in profit on this at one point. And you should have your stop loss move to break even. But I'm going to let that one go and not call it and just take the loss on the chin. But I will be watching around here next week. Now, if I just zoom out of this, we'll just zoom out of this quickly. We'll just drop down to the 1 hour. Now, if you remember, we were here. And yeah, I think the long zone was around here or whatever. We came down and we were from here up to here was a nice 20 pips. Euro GBP, because it's a different pip count. We're counting the pip and pound. It's a different pip count, so 20 pips in profit. We always move our stop loss to break even. We kept pushing down, and we might just be seeing a last push down here on Friday evening. Last little push, but after below the previous support here. This support 1, 2, 3, big push down. So we'll be watching next week to see how the pound reacts. We've got lots of pound news. So even though we look heavily bearish at the moment, I am going to still monitor this and just watch how price comes down here and how we react. Remember, it can be seen as still a retracement on this massive bullish push up on the weekly. So I am keeping an eye out on that, and we'll be watching how price reacts down around these levels. We might come down to this sort of 61.8% around the 0.8800 level. So keeping an eye on that. Euro NZD, very bullish week, rejecting that 1.700 level. Just have to sort of wait on this one at the moment. Going to keep an eye on this and see how we react. This obviously looks like the next sort of destination for it. It looks like we could come back up and tap this level again, where we could have a head and shoulders sort of situation. But Euro was on the move last week. So again, I want to see how this reacts. I want to see if we can pull back to perhaps get an entry, pull back to his 50% level. But at the moment, it's took off and there's no trade for this. So there's not really a setup on this at the moment. I'm going to see how the market reacts when it opens on this. So Euro was on the top of our list last week, but I'm not keeping an eye on some of these pairs. Euro USD I will be. Euro NZD not at the moment. Euro AUD, however, we have this daily sort of trend line that we had this fake out. I explained on Thursday after we had the news that on Friday I was going to be waiting for a pullback to look for possible entries. We started to pull back, had this sort of evening star at this former resistance, the last lower high on the 4-hour chart, and we do have this sort of support that's coming in underneath us here. So we'll be watching out for this pair, see how we react, see how the Australian dollar reacts. Now remember, gold it can influence the Australian dollar. So if gold goes up, Aussie dollar could go up as well, which could push this down further, and Australian dollar higher as well with New Zealand dollar, US dollar. Pound, US dollar, big week for this week as there's lots of Brexit news. We have now come up and created another lower high on this sort of daily time frame. Strong day, strong week, and that we ended on last week. But we are back at this monthly resistance of 1.2500. Key level here. You can see this support here, broke through, have this now resistance here. So yeah, it's an interesting level here. Let's see how price reacts. We did finish quite bullish on the day here. So we'll be watching around here. You can see the 61.8% retracement level. On the daily, I will be watching, even though we are bullish here, things can change very quickly, and also with the US dollar affecting this. So this could change. So I'm keeping an eye out on this one at the moment. We do have this trend line here coming across. You can see 0.1 and 0.2. We did break out of the inner trend line here. So as always, we do search for the next trend line as a next target. So we may push up a little bit more into that sort of region, and then we might be looking at trades from there. So that's something to watch out for this week. GBP JPY could be heavily influenced from the fundamentals over the weekend. We've hit on 13500. Next stop above that would be 13750. I'm going to be watching how the news reacts, how this reacts to the news over the weekend. Again, I can't go into too much detail about a lot of pairs because we have to see how the market reacts over the fundamentals over the weekend. It should react. I mean, it could maybe not react as much as we think it's going to. As I said, the media likes to report and overplay things sometimes, but we'll see what happens when the market opens. So I'm going to have to just scroll through some of these and then sort of update more once the market opens. Maybe send through some updates and have more of a detailed morning call tomorrow. USD JPY, you can see there's little gaps here on TradingView already, but I don't think that's going to tell the real story. I think there's going to be more movement. Yeah, USD JPY, another one that can be US dollar. The news will heavily affect the US dollar, and it will heavily affect the Japanese yen. So we need to see what's going to happen from here. We're looking at this last Friday, looking at shorting this. We'll have to see if that plays out. USD CAD, we've already gapped down lower on TradingView, but again, I'm not just on the daily chart, but I'm not taking that into consideration at the moment. But we did come back up into this sort of zone which I was aiming for, 1.3250, and from here now we'll have to see where we're going to go next. Is it time to come back down? See this sort of 3-pin pattern here, that morning star formation on the daily. We're coming up to that 61.8%. Let's see, is it time to push back down? Or remember last Sniper Sundays I was explaining how we're at a very crucial level where we could also see this as being a reversal to push back up one more time. So I'm going to be watching out for both scenarios on that next week. Australian dollar, remember this little sort of channel. As I said, gold if gold does rise, we could see this push up even higher and continue this. Remember, Australian dollar has been very, very bullish here, and this is the consolidation, but the consolidation has still been making higher highs and higher lows. And instead of normally we see a consolidation sideways, we're still creating higher highs and higher lows, sort of giving us a sign of the bullishness still. So this may just break out to the upside. So I'll be watching out for that. And along with New Zealand dollar, US dollar, we had a little pullback on Friday, but with the news on gold, we could see that push up. I'll update on that one as well. Australian dollar, Japanese yen, the pair that we were looking at last week, again, going to be heavily influenced by the fundamentals. So, as I said, unfortunately, I can't really give too many sort of targets or anything today because the fundamentals are going to open up and they may or may not make a big difference. If they don't, then I can reevaluate and explain where I think that things are going to go. But yeah, all of these pairs, Australian dollar and the Japanese yen, could be highly affected. So remember, tomorrow there could be obviously more news, but now that there's talk of war and stuff like that, it could escalate with people like Trump tweeting and stuff. So keep an eye out for that. I was obviously thinking that Australian dollar, Japanese yen would come down. What we can see here, if you sort of broken out of this daily trend line, and we are due a pullback. You can see here on the daily, we've got this gap down already. We can see here on the daily chart, 0.1, 0.2, broke straight through, not much of a pullback. On the daily here, we've got this nice tweezer top formation, showing prices slowing down, 1, 2, 3, expecting a pullback, but we haven't really had much of one yet. You can see prices slowing down, but the Australian dollar, like I just said, has been quite bullish. So we're still making higher highs, higher lows, higher highs, higher lows, and we're just here now making a double top. So I have to see, is this level going to hold? We'll have to watch out. Might see a little spike to the upside before we pull back down, but this is on my watch list and I will be updating for you next week as well. So let's see what happens in a few hours, guys. Let's see what the market open does. Let's see if oil does have a massive gap, like some things are reporting. Let's just have a look here. Yeah, like some things are reporting, we might see a massive gap. But let's see. If we do have a big gap, we have our entry down here. We made a high of about 500 pips. We see a push up into around the $60, like I initially said. It'll be very, very nice. And if we can push up higher, it will be even greater. So let's see what happens. And I will update you shortly once the market opens. Thank you.